Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Monday, October 24th, 2022. Let's jump in. Well, before I do that, I just want to encourage you to please click like each and every time you see anything that's published that you actually do like on our Wicked Stocks YouTube channel. It helps us out a great deal in being found on YouTube. When people search for Tesla, if we've got a higher like to view ratio that feeds into the algorithms, and we're more likely to be found, and we really appreciate that help. Also subscribe if you haven't subscribed by now. Subscribe to the Wicked Stocks YouTube channel. It'll prize you of notifications each and every time new content has been uploaded, provided those notifications are set on. And share with any friends and colleagues this video by clicking the share button below the screen. And last thing I'll say is the newsletter that you're looking at right now is a downloadable PDF form, and you can click on any of the charts. It opens up to a full view and continues to show the support and resistance levels on the right-hand side for the day. You can download it and keep it for your day trading use. Let's take a look at the charts. I think I'm going to start with, we'll start with the near term. And this is really why most of you tune in, I think, and I'll get to the big picture in a moment. But we're still in this sort of 206.85 short-term floor. Short-term for me is 3 to 5 days. And 227.66 short-term ceiling, also 3 to 5 days. In other words, we can, through the rest of the week, perhaps, trade inside this 206.85 to 227.66 region. And if we close outside of that area, it sets off, I'm going to say, a 1 to 2 week signal in the respective direction. And so if we close below 206.85, I would anticipate within a couple of weeks at the most, this 176.23 to 184.63 area down here. I'll show that in a moment. And if we close above 227.66, then inside of probably 2 weeks with this presently still heightened volatility, I would anticipate the 260s. And I'm going to show that in greater detail in a moment as well. But let's talk the day itself. I still have 215.91, still a valid 50% upside retracement level using the high from last week. That would have been Friday, Thursday, Wednesday, Tuesday of last week against Thursday's low. That 4-day extremes halfway back up is 215.91. I like it because it also dissects this area, the low of this high from last week and the high of the low from last week. So a bit of a pivot point, below which 206.85 remains an easy intraday reach, and above which, pushing or opening today above 215.91, should yield the mid-220s, mid to upper 220s, 227.66. Along the way, I've got carefully chosen minor points, 1919, 2293, and of course you can see here 2610. That is not far off the mark from 227.66. 227.66, this area up here, 226.10 to 27.66, can contain buying into later week, and we can fall off from here back to 206.85 within a matter of days. But if we do close above 227.66, as I've been saying, we have I'm going to say a 2-week rally into the 260s. And let me show you that. I'm going to show this chart here. So 227.66, you've got the 260s. There is a former rising 2/3 speed line that this week is at 272.87, and a new descending 1/3 speed line that's projected off the November high using last week's low. Last week's low was the lowest low since the high was put out last November. And so we have a new descending 1/3 speed line. They all come together in the 269.93 to 272.87 area. And as I mentioned a moment ago, closing today above 227.66 should yield this upper area within a couple of weeks. So if you're aggressively short Tesla, just know that closing above 227.66, you may consider liquidating that short position and reversing entirely. If you're a 2 to 3 week position trader, then you could grab, for instance, some 270 out of the money calls that don't expire for a couple of weeks at least, and 226.93 to 272.87, if tested, say over the next couple of weeks, can contain buying through November. And from there, we can fall back to new move lows within a matter of weeks. It was the settlement 3 weeks ago below this rising speed line, presently at 272.87, We actually gapped below it on a Monday morning, if you recall, that indicated not only a retest of the May 206.85 low, which we've been retesting quite a bit for the last week or two, but also perhaps this 177.18 to 185.29 descending channel structure, which lines up nicely in the coming couple weeks with a long-term Fibonacci support level at 172.77. So that still remains the overall longer-term outlook, and not unless we actually close above this 269.93 to 272.87 area do I see a protracted recovery rally into later year. Until then, this is our long-term ceiling through the rest of the year. Now, I'm also showing 229.82, and what I like about 229.82, it's in close correlation with 227.66. You see, I have it only as a minor point, but if we get our settlement this week above 227.66, that two-week rally begins to play out, and then we follow up Friday with a settlement above 229.82. That is a weekly settlement above the high of the weekly low, and that in itself is a meaningful buy signal, typically on a weekly chart. So we'll keep watching that as the week plays out, but just know that an early lead on that buy signal would be a settlement above 227.66, and then I would expect within a day 238.20, and I can show 238.20 right here, just a simple descending channel or descending trend line off these lows from August into early September. It can contain daily buying pressures on the way up. So closing today above 227.66, 238.20 likely tomorrow. And then, as I say, over the next couple of weeks, the 260s, 270s, we'll just leave it at that. Now, downside today, let me go back to this chart. Holding below 215.91, as I say, we'll keep 206.85 in reach. If we break 206.85 today, 202 even, our quick intraday target. That is the move low from last Thursday. We could get a bit of a bounce off of that on an intraday basis, but I think if we break or open today below 206.85, you should once again anticipate 197 even as a possible intraday objective. 197 even is found on this daily chart going way back. You got to find these old levels. This 197 line goes all the way back to this meaningful pullback low that was in the spring of 2021. And, you know, it's not a significant support level, but I think for the day itself, you can hang your hat on it, so to speak. In terms of, let's say you are short the day below 206.85, this could be a good area to pull in that short position, perhaps. And once again, closing below 206.85, and I'd rather show it, I would rather show it here. This is the weekly chart. Closing today below 206.85. I think by the end of next week, we should continue south into this 177.18 to 185.29 region. Now you'll see on the support and resistance levels, I've got 176.23 to 184.63, and that is found on the daily chart itself. So we monitor these on the daily chart, and that is really sort of the more refined, if you will, way to do it, because it's more precise, and especially for day traders. So this zone here, if tested over the next couple of weeks, and once again, it's expected, let's say, by the end of next week, if we settle today below 206.85, the 176.23 to 184.63 area is good bottom picking territory through the rest of the year. We can rotate off of this area and back and push higher as we move into Q1, and then we'll take those subsequent buy signals on a week-by-week basis. But it would be, no, that's the wrong chart to show you. It would be somewhere along the lines of this. So we put out a new low, we test the channel structure in the upper 170s, mid 180s, and then on our way back up, we begin casting new speed lines. This speed line, by the way, is trend defining long term at 269.93, and it is based in part on last week's low. So if we put out a new low, we take out last week's low of 202 even, then we reconstruct a new speed line based on that low. It's a very dynamic approach to trend identification. I've been using it for years in the commodity markets, and it works well. Nothing works quite well, as you're well aware, but it works well enough, and I think when you combine it with other line studies, it gives you a pretty solid sense of what our big picture support and resistance levels and our targets. So that is all I've got. Please click like and subscribe. I'll be back tomorrow with Tuesday's Daily Tesla Report, and you have a great day.